In this video, guys, we're going to look at 5 market tells, the 5 biggest market tells. Stay tuned. Hey traders, warm welcome to you. Thank you so much for joining me. So 5 market tells. A tell is something, you've all played poker, or you've seen films where they play poker, they go, oh, that guy's got a tell. Casino Royale, was it? He was itching his eye or something. It's a tell. It's something that is giving you an indication that something else is going to happen. It's a clue. It's something that is cropping up that gives you a bit more info into the next move on the market. Obviously poker's different, but in the market, it's okay. That's interesting. That's giving us a little bit more information. Is it perfect? No, but some of these are super useful and they're worth exploring further. If you've not seen them, it's worth exploring, it's worth understanding, because what it's really doing, guys, is it's giving you a little bit of a glimpse into the supply-demand imbalance, how to view the market from the perspective of supply and demand, which is all the market is, an auction process based on supply and demand. There's certain circumstances that give us a little glimpse. Now, can the supply-demand change, balance shift massively afterwards? Of course, but there's times when we can see it and go, hey, you know what? If this is a tell and this continues as it is, there's a great trade setting up. And sometimes waiting for these tells, waiting for it to tip its hand just to reveal what's going on for a split second before closing the doors again, gives a trader, an astute trader who's aware of these things, a significant advantage. So let's have a look. Number 1, where it closes on the day. Now, so you say, well, that's super obvious. Not always. Because if you think about what a close means, a close is, yes, in some ways it's a point in time. Now, this may depend on the vehicle you're trading. If you're trading an asset that trades 24/7, slightly different because it's just a pure timestamp, whenever that may be, whenever someone decides it's closed, midnight on London time, midnight Eastern time, not quite the same. But you're trading a stock, you're trading something that has a definitive close time or a definite close time, then it matters because it might have done lots of stuff intraday, but if it's closing near highs, it means that whatever has happened, buyers have decided to buy higher and higher and higher and higher and higher prices, and the bell's gone and shut it off. So obviously in some circumstances, some conditions, what's happened before the close is very important. That's why we get this kind of pin bars through. There's V-shaped reversals intraday, but closing at highs, especially when we're closing away from things like the VWAP, that kind of stuff, that's a tell. That's like, hey, I'm strong. And the buyers were stepping up and stepping up. The chances of that continuing are probably quite high. Now, does it mean it won't go down? No, not necessarily. But what it means is there's a chance that there's a serious overhang still. Depends on the speed of it, depends on the pace of it, depends on the angle, all the loads of other parameters. I'm kind of trying to be as simple as possible here and just scratch the surface a little bit. But it's saying, okay, we've closed at highs, there's an interest there, there's more aggressive demand. Okay, that may well follow through. So the next dip that you get the next day might be a Bible dip for a move back to highs, that kind of structure. All right, so how it responds to news. Super good tell this. So what do I mean by this? So this is what I categorize as unexpected response and expected response. So expected response is basically when the market has good news and it goes up, okay? Unexpected response when the market has good news and goes down, or has bad news and it goes up. Now you don't have to decipher the news yourself, you just have to know, hey, that should be bearish for this market. Based on, you can kind of look at headlines and all this kind of stuff. You'd have to understand the news flow, but if someone's going to say, whoa, interest rates are rising unexpectedly, or jobs are this, or if you're trading a stock, the earnings were this. So you just know it's bullish or bearish, and the response is key. Because if you have a response to the news that is against the grain, so in other words, it's bad news, but the market maybe sells off for a bit and then rallies, man, that's a big tell. It's a tell that people don't care. It's a tell that the majority is still in demand. There's much demand out there, there's not much supply. The knee-jerk reaction might just sell off, but if it's curling down and coming back and then ripping back through highs, and it's now at new highs, when there's bad news coming out, that's a great market tell, or vice versa. So watch out for that type of thing. It doesn't always come out, obviously, because news is not out all the time, but it's there and it's interesting. Number 3, how it responds to prior swings. So this is super key, and this is kind of bread and butter stuff, guys. If you're trading every day, you're in the trenches every day, and you're trading and you're observing, one of the things you do is see how it responds to the prior swing. So, okay, there's my prior day's low, for example. Does it even get there? How close to that low does it even get? That's a good tell. It's like, okay, we've got nowhere near that prior day's low. Nowhere near. Well, that's pretty bullish because we've closed the highs and get anywhere near the prior day's, that's bullish. There's been a concerted effort to buy this market before we even got to the low. But if we get to the low, all right, now what happens? What's the response to it? Do we hang around that low? Is that an accepted value? Do we shoot straight off it? Do we kind of do some work below it? This type of stuff, not always, but again, I'm simplifying things. There's loads of other metrics that we take into account as price action traders. But what we are doing is we're taking a little bit of a picture, a snapshot, and saying, okay, look, it went down, it literally kissed that low and just belted off and is flagging now. All right. That shows me there's probably some reasonable demand down there. So what do we do from that? Do we have a trade idea, etc., etc.? So respond to price swings. The other one is the size of the pullbacks / counter trend probes. So generalizing a little bit here, but when you've got a big drive, what happens when the market pulls back? Do people see that as a bargain, a small pullback? Or is it just slowly coming down and nothing happening? And give an example the other day. The YM futures Dow hammering through the floor, and it literally popped up in a 1 minute candle, quite a big green 1 minute candle, and poof, straight away, pretty much within 1 minute 30 seconds, must have been over a minute because it actually printed not necessarily because it could have been the last 30 seconds, but it printed a green candle and then it just got hit straight away. That's a big tell. It's like, okay, if you're looking to initiate a scalp position, you want to be short on that because the tell is it's rallied for a minute, if that, and immediately it's gone straight back down to lows. And then that's a big tell. It's like, okay, we've moved this big extension, we've pulled up, and straight away, poof, not even had time to do anything. The sellers have literally backed off for 1 minute, and then they're straight back on again. Good tell. Now, can that shift later on? Of course it can, but in that point in time, there's a definite bias to fresh supply coming in. There's an overhang. The sellers are happy to hit the bids. Buyers are stepping back. And of course, then it just rips through the floor, and then you're reviewing the trade as such. So the response and the size of the pullback, versus maybe a market that pulls back, holds, keeps trying to push back, kind of grinding, maybe does a bit more, and kind of finds that's a little bit different. That's not to say it won't roll back to lows, but it's not as aggressive as a tell as if it's just popping up and then immediately getting rejected. It's like, whoa, hang on, there's a lot of selling coming in here. Same with the high side. Sometimes not so aggressive to the high side very often, but if it's a news-driven rally and there's a catalyst, and I'm kind of skipping ahead here, but if you start to combine these, then boy, you really do have some good tells. But let's say there's a kind of catalyst ripping through highs, market pulls back and then just finds a bit and rips again. It's like there's strength there, superior strength. And then price response to breakouts. So, if the market is coming to a key level, how does it break out? Does it break through and just rotate and then it's off? Does it break through? Does it stall? And bearing in mind, guys, sometimes these aren't binary. Sometimes it's like, oh, it's on the edge here. It's broken out. It's holding. Versus it's just ripped through. And now breakouts might be the least valuable of all of these because you're kind of looking at the situation, but very often it's a good tell if the market has gone through a level and then come back. You're like, okay, it's gone through the level, we've had stops triggered, it's hunted liquidity down, it's filled out all that liquidity, it's now come back to a kind of short-term mean, and then it's rejected. Because that is basically saying, okay, well, that was just triggered by stops, that was just triggered by a sense of urgency rather than a sense of people wanting to get into the market for whatever reason, kind of considered a reason. It's more like stops were triggered, came through, came back, put the little wick in, and then we started to roll lower. Resumption of service resumed. That's often a good tell. And like I say, some of these are nuanced, some of these are different conditions, but these are kind of some of the things that you need to look for in the market and analyze and say, hey, do I need to read something into this? Now, it's a fine line between reading things into something that's not really that valuable versus spotting something and saying, that's pretty interesting. That really does shine a light on the supply demand, at least short term, and that gives me a short term edge, gives me opportunity to jump on, knowing that I'm likely on the right side of this trade, at least for the first period of time, and then I'm going to actively manage it and maybe I'm going to get a good runner and all that other stuff. So what's the market tells for your market? Is there something that you've spotted, that you see, how does it respond at the open? Another one is, very often the market rallies off the open and then gives it back straight away and starts to trade below the opening print after doing some work to the upside. That's a tell. That's like, okay, we've probably got some work to do to the downside before we can continue the rally. It's rejected and it's holding lower, and the open was a kind of an agreed value area at that point in time. It shot up, came back, held. Okay, that's interesting. So there's various other things that you can consider, and sometimes it's stepping back, it's reviewing the situation and saying, okay, is that revealing something of value to me? Is that giving me some insight into supply-demand imbalance? If so, do I want to take it? If not, do I want to wait for my next trigger? All right, guys, I hope you found this useful. What are the biggest market tells? If you like this kind of stuff, then consider joining coming up on the channel that I hope will find value from and I hope will help you improve your trading. Take care. Bye-bye.